Hey guys, it's Savannah with EchoFine Properties, and today I am here to discuss the big pressing topic in media right now, and probably one of the biggest questions I'm getting from clients, which is how are tariffs going to impact the real estate market? At the end of the day, with headlines where they're at, the uncertainties around tariffs and where they're going to end up at the end of all of this is starting to create some impacts on the real estate market. But it's really important to take a look at in the long run, once these tariffs start to take effect, how will that potentially affect housing affordability, construction, and future investment opportunities? So the first topic I want to discuss today is how tariffs correlate with inflation and interest rates, potentially rising interest rates, right? So tariffs are essentially taxes on imported goods. How that relates to us in real estate is when you look at new homes that are being built, the cost of steel, aluminum, and lumber, which are typically imported goods, if they experience a raise in tariffs, this could directly impact prices because the construction or the developer is going to put that cost back onto the consumer in order to cover their expenses to build the home, right? And so this inflation in prices is typically, for the economy to combat that, they typically raise interest rates, and interest rates can directly correlate to mortgage rates. So if we start seeing interest rates go up to combat inflation, which was caused by the tariffs, then we could consequently also see mortgage rates increase. So number two, what I want to discuss and dive a little deeper into is how tariffs are going to impact affordability, right? These are challenges that if you've been watching my YouTube channel, I've already been discussing that we are seeing here in South Florida with insurance and home prices not giving. It has made our market less affordable for most people. So with tariffs coming into play, creating further inflation in prices, and possibly an increase in mortgage rates, I see consumer confidence falling to an even lower rate, right? Because if affordability is already a challenge and consumers have already said here in South Florida that they aren't willing to pay most of the prices out there today, that this could create a further gap between what we're already seeing in active listings, pending, and sold listings. We are starting to see inventory stack up and options stack up as the consumer says they do not agree with where the market currently stands with prices. So something will have to give. That brings me into segment 3. Now, before I jump to conclusions and say, hey, pricing will be the first thing to give, in some scenarios, we are already seeing this based on home maintenance. Again, if you jump to some of my other videos, you will get that whole spiel. It's a whole nother tangent, right? But the reality is prices may give in the short run, but another trend that we're going to need to watch is as imported good expenses increase, if the market cannot bear the new home construction prices at where they need to be in order to sell, this could lead to builders halting in new construction. And what we have to understand and what we dabbled in during the pandemic is that our nation is already at an inventory shortage. Builders have been fighting to catch up since 2010 and the change in the market had started, right? So if builders have to stop building because the market doesn't support where the new prices are going to be, this market could quickly shift from an opportunistic market for buyers back into what we saw very similar in the pandemic market with the inventory shortages. And this could change what is, again, an opportunist market to more of a seller market, depending on where all of those things lie. And so I'll get into that with segment 4 and the silver lining of where opportunities currently exist and where they could come up. But at the end of the day, if tariffs create a market and pricing for new construction that cannot be supported, we could see some inventory shortage issues if builders stop building. So this leads me into segment 4, which is discussing the silver lining, opportunities for both buyers and sellers in today's market. Obviously, today's market presents a numerous amount of challenges here in South Florida between insurance, affordability, and now we have tariffs potentially hindering that as well, right? If we see mortgage rates go up, that's only going to hurt affordability. Even if prices come down to combat that, it is still going to make it more expensive to buy a home. So with that said, if you are a buyer in today's market that can afford a home here in South Florida with the rates where they're currently at, I would really encourage you to get in now, because if rates go up, it's going to get harder. And the reality is, in the long-term picture of things, if, like I said, builders stop building and we start seeing an inventory shortage, we're going to see the market flip and you will have missed the opportunity. So get in, take advantage of the awesome opportunity to negotiate right now. Get those rates as low as you possibly can and hang tight and take advantage of the wave of income and equity and all of that that's to come the longer you hold on to the home, right? And for sellers in today's market, while you may have to give some concessions to get your home sold, while prices may make an adjustment here to combat rates, tariffs, insurance, uncertainty, buyers' lack of confidence in the market, and all the other bullet points that are happening in our market right now, understand that if you are turning around and then having to buy another home here in the area, you're going to get the advantage on the buy side, right? And then again, going back to once you get into the buy side, ride the wave. We don't have a crystal ball on when things will start to turn around, but real estate always does. That's what makes it such a great investment. And once it does, whether it be for inventory shortage reasons or what have you, you will have secured a great deal and a great market, and you can ride the wave and start gaining equity and building wealth as the market starts to improve. So my final thoughts for this video and how tariffs could affect the real estate market, what I believe, and a lot of expert insights back this up, is that tariffs are ultimately going to create short-term volatility, whether that short-term is 6 months, 1 year, 2 year, 5 years. In the terms of a market, short-term can have many meanings, right? But the idea is that real estate and the market as a whole is resilient. And so once the market adapts to the new changes, things will bounce back. So don't miss out on the opportunities while they're here, right? The big risk takers, the big investors are out there buying real estate right now because they know what this means. They're going to get in low and ride the wave. So if you can do the same, take advantage of it and start building wealth. At the end of the day, staying informed and adaptable is absolutely key in this market. Understanding these dynamics will position you in the best possible place to make the best possible strategic decisions, whether you're looking to buy or sell. Thanks for tuning in. If you enjoyed the insight, like, share, subscribe. If you have other questions that you feel were not answered in this video, drop them below. Would love to pick my brain, pick other people's brain, and try to get those answers for you. If you guys need anything else, you know how to reach me. Again, like, subscribe. Thank you so much.